Reddit has now had 4 consecutive quarters of positive earnings per share. One of the requirements to join the S&P 500 is that the last 4 quarters in summary needs to have positive earnings per share. They are now eligible and they have a larger market cap than some other companies that are a part of the S&P 500 today, such as, for example, Alexandria Real Estate that I just had a look at. That's been on a downward trend. Perhaps there will be a buying opportunity there if we see a dividend cut. But this video is about Reddit stock, some of the highlights and a little bit around the trend with this company. I talked in the Discord group about Reddit earnings before, my expectations. I expected a beat in this case, although the revenue beat of 68% year over year, quarter over quarter growth was larger than expected. But talking a bit about how Google had a beat on the advertising side and how Meta also had a beat on the advertising side, but a one-time item, special tax payment under the big beautiful bill, had that stock crashing after earnings. But the thing here to remember for us Reddit investors is that a rising tide lifts all boats, and we live in an attention economy. We live in a post-scarcity economy. We have everything taken care of with food, shelter, and now we're looking at wants. And to be able to push more products, well, then companies are paying for eyeballs to be able to sell those unnecessary products. And it's needed in the modern economy. Reddit has a place. Reddit has growing numbers in terms of daily active users, or DAUs here. A lot of focus on that from Wall Street. We saw a 19% increase here to 116 million daily active users for the quarter. One thing to be wary of here was that we saw very little growth in daily active users from America, and a larger part of this increase came from outside of America. Why do this matter? Well, it matters because American eyeballs are worth more than European eyeballs, where I'm from, or Thai eyeballs, where I am now. Advertisers are simply willing to pay less for those foreign eyeballs, if you're watching from America, because we have lower disposable income and we can't consume as much as the American consumer. So the American consumer is just worth more in terms of that. But that's just a small caveat. We saw nice top line growth. We saw bottom line growth. We saw an increase in guidance. We saw a triple beat in this case. And as I've commented in previous videos talking about Reddit, I see plenty of more growth for this company. The platform is not at all saturated in terms of the ad units that's placed there. And we're seeing this growth in terms of impression-driven growth as well. And this is what this daily active user thing is representing. More impressions, more potential for ads being served to a potentially buying consumer. And this will just continue to increase both the top line and the bottom line as well. One thing that I want to talk about in the highlights part was that they talked about Capex only being 200 something million as a highlight for operations, as a highlight of the quarter. I disagree with that press statement. I think that, okay, I'm in a lot of these negotiations, doing a lot of this, in my day-to-day, and I see Capex versus the other side of the coin, the Opex model. Sure, Capex is a big expense now. They're buying something that they own, but to rent, to pay as you go, to pay for what you consume, what you use, like Reddit do, it becomes a bit more costly in the long term. However, also the benefit is that they are capital light. Now Reddit, they are so well off now that they could buy on Capex, would be beneficial long term. However, right now Opex, sure, go for it, have a low Capex, we're gonna see fantastic numbers short term, but it will be a bit more expensive long term. But it also gives simplicity in this case. They don't have to manage, for example, a lot of infrastructure on their own. We know that they're using a managed service provider, in this case for data center infrastructure, to keep the Reddit application up. So no issues there. That's just a small, really unimportant caveat, but I think it's something that a lot of people miss out on. They highlight this. It's, you know, financial magic. It doesn't really matter that much in the long term. What matters for Reddit is this continued growth, this growth that is impression driven, and that the bottom line is increasing as well. And it's going to be quite interesting to see, now that we rebalance the S&P 500 here in December, if perhaps Reddit stock will be included in the S&P 500 at that time. That will create a lot of buying pressure on the stock as index funds scramble to rebalance and include the market weight that Reddit requires, that the market cap requires, into those S&P 500 passive index funds. But as we've seen with, for example, Tesla, when they were included, it took 2 more quarters from that they had all of the requirements there. It took 2 more quarters for Palantir as well to be included. But once those stocks were included, we did indeed see outperformance. Sure, they had amazing results, both of them, right after inclusion, Palantir especially continuing. However, the supply and demand side of that equation certainly helps with the increased buying pressure. It's also going to bring increased coverage, more eyes on Reddit overall from analysts and from Wall Street. Quite the interesting company. I really like this stock. I think it's $30,000 or something like this, 30,000 something. It's 2.3% of my entire growth portfolio at the moment, so quite a large position in Reddit right now. I will not sell a single share. I think that Reddit will continue to outperform the broader market going forward, both in the short term and in the medium term as well, especially if they potentially here get included in the S&P 500. Purely statistics, looking at companies that just recently got included, we see that they tend to overperform the normal stock market in the short term here. So a very interesting company that definitely warrants to be on the watch list and perhaps in the portfolio if you like it after you do your own due diligence. That's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.